Right, we're good to go. Hello again, everyone. My name is Neil. I am a co-founder of ANTSSYS here in London. It's a pleasure to be here with you this morning, afternoon, evening. Thanks for taking the time to join us. This presentation is being recorded. It will be posted to our YouTube channel with links after the presentation. What I'll do is I'll just go over quickly the format of what I want to try and achieve here today. And then we'll work through it. The idea is to make it as oh, my phone's ringing. To make it as interactive as possible. So I'd like to have you ask questions. If you've got any questions, feel free to ask them. If you have something that I'm not clear on, I am often guilty of speaking too fast. So if I'm talking too fast, please just ping a question up or say slow down or please repeat. The idea is to make it as interesting and as relevant to everyone as possible. I often will make the mistake of assuming what I've said makes sense or that everybody comprehends what it is that I'm saying, and the idea is to make it is meaningful for you. So quite often if you miss something reasonably early on in the presentation, that might become critical at a later stage when we're trying to deal with it. Let me just turn that off. I'm getting notifications. So please feel free to ask questions. That's the first thing. The idea here today is to spend time with some of the more advanced elements of the ANTSSYS trading platform, what we affectionately call the ATP. We're going to be dealing with, first of all, explaining the formats of what you see here. We'll go through a couple of the basics. By now, I expect everybody who's with me here today will have attended at least our beginner seminar, be conversant or familiar with the navigation of the actual platform itself. In other words, you know how to log in and what have you. We'll be going through it very quickly, but I expect that you do. And then we're actually going to be going through a couple of practical setups. I'm going to show you exactly what one would do as a trader, what one would typically do as an example of setting up your screens, looking for a trade, and then actually executing on a trade. We do deal in live charts, so we don't cherry pick for examples. We'll be doing it together. We'll be finding a couple of examples together and working with them together. So the idea is to make it meaningful and relevant. There's nothing worse than seeing someone who does a presentation using charts that are 4 weeks old. That doesn't mean anything to me. It must be something that I can see now today, right now in front of me. So that's the idea. We'll then be talking about setting up the screens for the trading strategy, which is what we affectionately call the 3-2-1. You'll need to forgive me. I've recently endured a bit of man flu here with the change in season in London, so I've got a little bit of a croaky voice. I'll work hard to push through, but if I come through a little bit croaky, please forgive me. And then we'll deal with a few of the extra things, a couple of additional things like our forums, where you can access information, and sort of third-party websites to visit, which will round out your trading experience. At the end of every session, I'll stop and allow you to ask a couple of questions. And I know I've said it already, but I'm going to say it one more time just to make sure everybody's absolutely clear. Please ask questions, guys. I sit here at my desk. I'm essentially talking to a screen. And when you give me feedback in the form of questions, I know what it is that you're asking. I can tend to lead on blindly. I could quite happily sit here for 5 hours and talk to you guys about the system and its ins and outs and the experience of it. That, of course, isn't meaningful unless you're asking me questions. So please, I dare you, I ask you, I implore you, please ask questions. You're welcome to do so. Please don't be shy either. It's good fun and we're all friends. Right. As we start, just that you guys are aware, you should all be able to see my screen. The actual offer, that is the promotion that we're running in conjunction with Oanda at the moment, is fairly straightforward. I'd like to just go over it for a second to make sure we're all completely clear. We have had 1 or 2 questions. In order to the ANTSSYS trading platform, the ATP is a commercially available product. You can rent it every month using you're signing up, and the fee is normally $199 a month. Now, Oanda have done an extraordinary thing in partnering with us to make the system available to you at no charge. Now, when I say that, I need to be emphatic. You absolutely will not be billed at all by Oanda if you meet the minimum criteria that they've set. And we believe that these minimum criteria are very reasonable. In fact, they're extraordinary. All you need to do is open a live trade account. In other words, if you have live a trading account, make sure you have a deposit of at least $200 or an equivalent in your trading account. And then over the course of a month, all you simply need to do is execute 5 trades. 5 simple trades, round-trip trades, buy and sell trades, and that will give you continued access to the system for as long as you continue to make 5 trades a calendar month and as long as the promotion runs. You will not be billed, you're not obligated to make any commitment. So it's an extraordinary opportunity and it's an extraordinary offer from Amanda, and we're very excited to be partnering with them on this. The reception has been extraordinary, by the way. We've had a really, really great turnout, really, really great response, and really good reception. And all of your questions and feedback and so on is all taken on board and very enjoyable for us. Right. Okay, so let's get started. You'll notice I run. I get teased for it. I'm a very big fan of real estate. As I sit here right now, I can see 8 screens. 8. That's I've got 6 trading screens and 6 charting screens and 2 trading screens. The difficulty here, of course, this morning is that I'm going to try to condense a lot of what I'm doing into a single screen where you can see it, and that is the limitation there, of course, is self-evident. I don't have the space that I would normally do, but I'm going to work hard to make sure that you can see everything that's important. On a personal note, I would always encourage people, you can never have too much space on a screen. Information is key in this game. And the more information we're able to access at a glance, in other words, and in an instant, and comprehend and utilize, is always going to be putting you in an advantageous position. Not in terms of analysis paralysis, too much information, but if you set out your screens, lay them out in a way that it's ergonomically makes sense to you from left to right. I typically will number, for example, my pairs alphabetically. So I just know from A to Z, from left to right, I'm always getting, my eyes can scan for the information that I'm looking for. Then for redundancy, quite often the lot sizes, the position sizes that we'll take will not be insignificant sums of money. And when you are in the market and your currency is exposed during a trade, you want to have an element of redundancy. And that's why we generally will have a backup. I have a second machine that runs. Again, this isn't essential, but just that you know who you're talking to. We have a second machine which runs 2 sets of screens, which are trading screens in addition to my charting screens. I've always got the fallback of moving somewhere else. It's just I've never had to use it, touch wood, but it's always nice to know that it's there. So I'd encourage you to use. Doug asked a quick question: how many computers do I use to run my 8 screens? I'm a bit of a geek. I use 2 machines. Again, we're in a Mac environment, so I use a Mac Pro. The new Mac Pro, that sexy piece of steel tube that has a 6-screen output. I have personally found, and again, I don't want to advocate one over another, but I've personally found that an Intel chipset Mac tends to deliver by far the best, most stable cross-platform testing. What you'll notice with my screen is I'm in a Mac environment here now. You can see I'm in the Mac control panel down at the bottom here, but I'm going to be switching to a Parallels environment now. So we actually run Windows. That's the stability we get. We actually run Windows inside Mac. There are a couple of big advantages, particularly in terms of security that it gives us. The cross languages allow us to keep the 2 environments quite sterile. But yeah, I use a nice, big, fat, powerful Mac Pro. I will find a multi-threaded Intel chipset, something with 4 or 6 or 8 cores is plenty to do the job. Bearing in mind, it's a good question in terms of context, the calculations that we're doing when we're generating each of our charts, it's never a single, it's not like a 50-minute candle chart, which is a single print. We're analyzing several thousands of points of data every time we're printing something. So again, a good, nice big memory and a nice big processor is never going to be a bad idea. I'm not advocating going out and having a crazy supercomputer that you can manage a space shuttle launch, but certainly have something that's nice and powerful. Great question. Thanks, Douglas. All right, so let's get started. I pop into my Windows environment. I'm just going to go to what you guys will see when you first arrive, which is the Euro-US pairs. Just very quickly, I'll just do this with you. Let me just close that. I'll just do it with you. You guys will be familiar that by now you've got your funded account. You're ready to go. Let me just bring up the other window so I can see any questions. You will then log in using in this instance, I'm going to use a live funded account. So we're in a live environment with real money. I will have really gone through the terms and conditions acceptance. You guys will all have done that once already, and you're populating this page here. You'll immediately arrive where you'll see the chart is. You'll be seeing it like this, by the way, where range bars initially disabled. We do that purely in terms of expediency. So the load on the your internet connection initially is reduced because it does pull in a great deal of data, but nonetheless you'll notice it's still very, very slick, very, very quick. So you'll arrive in this environment, right? Just in terms of basic usage, guys, the environment is self-evident. It populates with the currency pair that's up here in the top left corner. And you'll notice that there are a number of studies which will populate on your screen immediately. I'm just going to go through each one of them. For those of you that are not familiar with what the information is that it's giving us, I think it's important that we understand what we're seeing. It's very important that we know what does this mean? Why is this relevant? Why is this exciting? Why is this not just another computer screen? Well, the answers are here. The ANTSSYS study themselves, they consist of 6 different studies. It's all proprietary stuff. This doesn't exist anywhere else in the world in its incarnation. We're very proud, very excited to be partnered with Daryl Guppy. Daryl is apart from being a good friend, he's also a board member and a director and a shareholder in the business. So we speak with him daily, or at least every other day. He's been a key component in driving this, and he obviously lends a great deal of pedigree to what it is that we're doing here. The system isn't witchcraft. It's built around studies that were originally described by him in the early 1980s. So we're very excited to have his endorsement. I'm going to just break them down for you very quickly. The first one, and certainly, excuse me, clearing my throat again, I apologize. I'm just come out of a little bit of ill health. The first thing that we're going to do is, just that you guys know what you're looking at. Most of you will be familiar with the chart that looks like this. At the moment, we're looking at a 1-minute candle chart on the Euro-US pairs. The difficulty here, of course, is that in terms of breaking down, let me just zoom in a little bit. You can see in terms of trying to describe mathematically the relationship between, say, for example, this set of 1, 2, 3, 4, 5, 6 odd short candles that we're seeing here in relation to this short candle with a nice log wick and then a rise. The difficulty of describing mathematically the fact that in real terms, this candle here, this little skinny, stumpy, short little green candle, is exactly the same mathematically expressed as this long, fat red one. And of course, you and I will know that that's mathematically untrue. They're not. They're completely different. They're expressed across the x-axis as being time, which is in 51-minute intervals at the moment. But of course, the ability to tell mathematically instruct something to assess the relationship between that one and that one as being the same unit of measurement becomes very, very complex, very, very difficult to do. So what we did was, and this is probably the biggest seismic step forward, is we instructed the screen to break down the information into tick-based data, point-based data, and we did that by adding range bars. We do that first of all by instructing the system. You guys would need to do this to change your chart to range bars. The first thing that you'll notice is that the information, it becomes a bit more, it's quite cool. It kind of looks pixelated. It's not. What it's done is, you remember those 3 or 4 long short candles that we saw in the 1-minute candle chart. Those are now expressed as uniform units of measurement. Your x-axis now becomes an acceleration of time. Your y-axis becomes the same unit of measurement. Why is this important? Why is this different? Is because it allows us to now mathematically assess what that particular piece of information is in relation to the previous one, and then of course the one that's likely to come next. It allows us what Daryl affectionately calls fractal repetition, the ability to determine, to predict, it's a great word, predict what is likely to come next. You can see already here, this bar is next, this next bar is forming. So this allows us it gives us an insight into what we may be seeing is coming next in terms of the future. Now that gives us an edge. That gives us traders, that gives us an insight into what the market is doing by its shape and form in a consistent x-axis that no one else is looking at. So that's one of the biggest first things to assess, right? So that's why we use range bars. The next thing that we'll notice as part of our arsenal, all included in the ATP built in, is what we've affectionately called the super guppy. I don't even remember how we came across calling it a super guppy, actually. I could probably think about it, but Essentially, what you'll notice is that there are two clear groups. There are two distinct groups. And the reason that we do this now, those of you who've read or attended Daryl's workshops or have read his books from sort of through the 1980s, 1990s will remember that he talks about a fast, a medium, and a slow group. What we've done is we've eliminated his fast group. His medium group is our fast group, and his slow group is our super group. And then we've got another two groups which are not visibly displayed here. They're not important because visually they add no value to you, but they add another dimension of variables for us to calculate against. You don't see that; those are hidden in the background. They're not hidden for any reason other than they would just give us too much information. So we've stripped them away. What you see here are two groups: the blue group, which is what we call the fast group, and then there's reddish orange group that we call the super group. Now, quite extraordinarily, now that we've turned a time-based chart into a range-based chart, and we've leveled out the playing field, we've called it a uniform picture, the first thing that you'll notice is that when the fast group is above the slow group, i.e. blue is above red, price tends to climb. And lo and behold, look what's happening here right now. As we're watching this chart now, this is Euro US. You've been invited to pull up your own charts at the same time. You're welcome to work along with me. The first thing that you'll notice is that there's been a change in direction on the fast group. It's crossed through. You can see here, it's crossed through. Let me see if I can zoom in a little bit closer. It's crossed through the supergroup. There it continues. There it goes. This is live. This is not pre-recorded. This is the great thing about it. This is why the system is so cool. You'll notice that price has descended. The price has fallen, retraced. It's pretty much touched. The price has touched this what we call the 300 EMA. I've probably got to come up with a sexier term for this orange line. Technically it's called the 300 exponential moving average. That's a 60 EMA. And the price has touched the 300 EMA and has fallen away. This would be an absolutely optimal position to be getting into a short trade. In other words, price has climbed, it's fallen, it's retraced, and it's dropped. This would be a perfect situation to be looking for a short position. And that's happened now. This has happened during the time that we've been having this live session. Bearing in mind, I just need to default back to my good friend in my left ear here reminding me, we have to be very careful about not giving you trading signals. In other words, I can't instruct you when to trade. We open up a Pandora's box there. These are identifying high probability opportunities, but the cool thing about it is that we're identifying these opportunities together. Please don't construe this as an instruction to trade. I didn't tell anyone to go short, but it certainly is giving us the indication that this would be an ideal high probability opportunity to be getting into a short trade. Why do we say that? Well, the next thing we do is visually, and this is where it becomes quite exciting, is we color the bars based on the information that the relationship between the 60 and the 300 EMA are giving us. So the fast and slow groups, based on the position that they're giving us, you can see price drop below, we'd be looking for short opportunities, price rose above, we're looking for the longs, prices just cut drop below, we're looking for the shorts. And lo and behold, when it's green, it rises, and when it's red, it comes down. Again, this is just the default page, guys. This is just the one that arrives when we log in. I haven't chosen this one for any particular reason. We're gonna work together with a couple of examples in a minute. But this is just the first one that comes up. And isn't it extraordinary? Isn't it exciting that the information that you're seeing is true? Is relevant. It's real. The picture that the story that it's telling us is true. So that's the GMMA. And then finally that I'm going to show you now is, of course, the ANTS. And these are little signals that tell us when the high probability conditions are at their optimal. They're a call to action. They're a call to arms. They're a galvanization of everything that we're saying, all of the maths and all of the exciting stuff that's going on in the background. It's calling us to actually do something, to physically react. Of course, the initiative is it's entirely your prerogative as a trader what you want to do with them. But what we've learned historically is that by paying attention to when these little ants fire, we call them ants, they're the little triangles that you see on your chart, you will, with a high probability, be called into an area of high probability trading. So that's what we're looking out for. We're looking for the change in direction, the color change in the moving averages. So in other words, the fast group and the rising above or dropping below the slow group, the color change in the actual bars, the price data that we're getting, the feeds, and then we're looking for the ants to fire. We're looking for the actual signal. And lo and behold, I don't know if you saw, we're getting a painting of a, there we go. We're in a situation now where an ant is giving us an instruction to short. So we're looking out for that now. It's telling us, it's calling us to action. Right. The way that we actually go, oh, sorry, let me just stop there for a second and ask if there are any questions. Is there anything that's unclear that that I've said so far? Is there anything that I've moved too quickly with in terms of explaining what we're physically seeing in our charts? Guys, again, please ask questions. I love questions. Questions make me feel that I'm reaching you, and that's always nice for me when I'm sitting here. I don't see any questions at the moment. Excuse me. Right. The next thing that we're going to be doing is, how do we choose? The big question is, well, so what, Neil? I mean, so what does this mean? What does this tell me? How do we go about selecting what we want to trade for the day? Great question. My argument has been, we're doing this full time for a good couple of years and had a modest success from it. The question is always, well, how do I select what I'm going to choose? Do I trade indexes? Do I trade gold? Is it a commodity? Or is it a particular commodity? I'm after the oil. Oil is great at the moment. Big movements in oil the last 2 days. Fantastic movements in oil the last 2 days. A fortnight ago, the daily ranges and the currencies were really a little bit tragic. They were right down. They throttled right back. Volatility dropped off. It was looking pretty bleak. So the question is, how do we choose which currency pairs to work? Doug, I'll come back to your question in a second. We'll break that down in a second. The first thing I want you guys to do is every day as homework, I want you to go to our homepage, the ANTSSYS.com homepage, which is here. You're all familiar with it. Go to our support tab and log into, you can see it automatically populates with average daily ranges. This is a live update at midnight every day that looks back 5 and 10 days on the most popular currency pairs and indexes and commodities that are available. Why is this important? Why is this a thing? Why do we bother to do this? Well, the reason is, if I'm going to wake up in the morning, brush my teeth, and sit down in front of my desk waiting for an opportunity to trade, and I want to make, let's say, 30 pips a day or 40 pips a day, it's a reasonable sort of target. I probably want to choose a currency pair. If we're talking currencies, let's talk Forex for a second. I'll probably want to choose a currency that is going to give me a high probability of generating that 30 pip target I'm after, surely. So why I would start with a currency pair that in a 24-hour cycle, in the 24-hour times that the market is live, is only generating, let's say, for example, here, US yen, over 10 days is only generating an average of 84 pips. The probability of me generating 30 pips of trades in that time is probably quite slim. Just think about it practically. Think about it in terms of common sense. So what we do is we choose pairs that have a high daily range that will give us a higher probability of seeing the targets that we set for ourselves. We do that by looking back 5 days. 5 days in Forex is about as far back as you want to go. They tend to be, everybody knows, Forex is the nice volatile market. It's the biggest market in the world. The most recent data that I've managed to access is through the London session. We do $11.2 trillion of Forex getting exchanged every single day. $11.2 trillion a day runs through, 70% of that runs through the London session, the London Forex session. My argument being, people, if I can skin off a teeny little slice of that, no one's going to notice me, and we can be very, very successful. So the idea is you want to be hitting when the market is at its liveliest with currency pairs that are the rangiest, the nice, biggest, widest ones, where the third factor, of course, is your spread. So the cost of actually doing the transaction. I mean, a currency pair like USD DKK, the Danish kroner, I mean, it's a mad pony. I mean, the thing is absolutely extraordinary. It runs like a scalded cat. The problem is its spreads are difficult. The spreads are it's expensive to get into. So there's a relationship between you want sort of a slow and steady, but you don't want the sick, slow pony. And that's why I say choose something with probably at least 150, 160 pips a day daily range if you're looking for about 30 a day. And make sure that the currency pair that you choose is the spread is not too wide. We'll deal with that some more in a second. So let's just filter this down from top to bottom. You can see the top performing pair of the last 5 days. This is our website. You can go, you can join me there right now. You can have a look along with me. You can see pound New Zealand is 293 and euro New Zealand is 252. Euro Australian, nice one, 228. Pound Australian, 280, and so on. So the first thing I do is I want to be in the top list, the top level of currency pairs. I'm going to, let's just for argument's sake, let's say Euro CAD, I quite like the look of. Euro CAD has got a 205 pip daily range. So again, if I'm after 20, 30, 40 pips a day, you know, Euro CAD is probably going to deliver that for me quite successfully. That's probably a reasonably good one to start with. So let's look at Euro CAD as an example. 1 second while I populate this. And again, you just type in the currency pair that you want, and Euro CAD, it's populated there. All right, there it is. Now let's make sure that it's a range bar setting that we can read. In other words, let's make it into a speed that is where each range bar is expressed in a uniform, in a size that makes sense to us. Now, folks, I'm gonna allow everybody to take a 30-second breather and realign themselves and recharge their cups of tea. Here comes a big point. Here comes a biggie. This is one you need to pay attention to. In the currency pairs, you can see in the right margin here of Euro CAD, we're dealing down to 1, 2, 3, 4 decimal points. So we trade down to 4 decimal points deep. We don't look at the 1.45. We're more interested in the 0.2, the last 2 at the bottom. And those are how many pips are being generated in between. So I want to trade down to the last set of decimal points. I want my range bar size to be commensurate with that. So I'm going to turn this into a 3 pip range bar. And I do that by telling the value of the range bar, setting the value. And if you missed it, let's just do it again together. I go to options, and next to the range bars, you'll see there's a little pencil that grays out, and you click on it, and it brings up to ask you the range value that you want to set. Let's go together. We're going to make it a 3 pip range bar. So it's going to be we're trading down to 4 decimal points, so 0.0003. Right, do you agree with me? That would be 3 pips to the 4th decimal point. We've got the 4th decimal point here. That would express that every one of these bars is going to be 3 pips big, 3 pips deep. Right, so we've done that. Oops, hang on a second. I'd auto select. Silly. All right, so type 0.003. Let's just do that again. Have I got the right amount of decimals? Yes, I do. There we go. Right, boom. Immediately, you see how it sexies it up? You see how it tidies it up, cleans it up? We now know that as a uniform picture, each one of these bars expressed is a 3 pip range bar. I did this on as a little Word document. Let me just put it up for you guys in the background. You'll be able to see this now. Make a note of this. Make a grab, make a note of this. A 10 pip range bar on a US pair, so anything that's not yen, is 0.001. Obviously, because we're on the right side of the decimal point, every decimal point that we go to the right is effectively becomes it's a dead number. But effectively, you're looking at 10 pips for a 0.001. If you wanted a 3 pip range bar, it would be 0.3. 0.5. You wanted a 15 pip range bar, would be 1.5, and so on. A 20 pip range bar would be 0.02, and so on. So just make a note of this, guys. That's how you calculate it. It's very important that you do that so that the information you're seeing is seeing. Tenjo is asking a quick question. Sorry, why choose 3, not 2, 4, or 5? Great question. Right. The reason that we do that when we're talking about our strategy, which is what we call this 3-2-1 strategy. Let me just come back here for a second. What you guys want to try and do, just pull back up so I can see your questions. What you guys want to try and do is, and I know it's difficult to describe until you've spent. We need to spend time together. You guys need to join me and do this at these sessions together. What you want to try and see is you want to remove as much chop from the chart as possible. You'll agree that looking at this chart here now, let's just zoom back out again. And this is Euro CAD. I'm just going to zoom back out. I think you'll agree, looking at this chart here, that your long end opportunities are good, your short opportunity is nice and long, your long opportunity again. So your buy, your sell, and your buy on Euro CAD at 3 pips, so 0.003 per range bar, looks really good. It looks good. Now that sounds silly, perhaps on the face of it, but it makes a lot of sense. It looks good. It looks smooth. It looks consistent. It looks leveled. If I change that, let's do that now, just to ask Tenjo's question. If we change that to a 1 pip range bar, so in other words, a maddeningly fast one, you'll agree with me, just looking at that, there's too much chop in that for me. It's too fast. In other words, there's a nice long opportunity here. There's a bit of a messy short. There's a pretty good long. You wouldn't be losing money, make no mistake. We're back into a short condition here now. But boy, this is expressed since 8:30 this morning. It's now 12:34. So in the 3 or 4 hours that this chart has been going on, it's giving us a long and a short and a long and a short. I feel a little bit like I'm overtrading. I feel a little bit like I'm giving myself too much work. It's a little bit much like, oh, I'm picking a rod for my back. So let's smooth it out. Let's just step it back. Let's double the size of the range bar. So let's change it from a 1 pip range bar, which is what it is at the moment, and let's change it to a 2 pip range bar. So 0.002, give it a second, right, boom. Immediately, it gives us, you'll agree, let's assume you've never seen a chart in your life before. Immediately, this looks smoother. I'm still seeing a little bit of chop here. I'm still seeing that this is a little bit too, like this long was going to put us on the wrong side when it really was a turnover trade, a retracement and a continuation. We've got a little mess here. We know that we're in a short condition now, but it's looking better. But it's like for me, it's not quite there. Vittorio, thanks. It's your comment, nice exclamation, is exactly right. Now it looks nice. It's starting to look better, but I'm not quite sure I'm there yet in terms of trading. I'm not quite sure that it's perfect. So let's step it back another one. Let's go to a 3 pip range bar. So I just changed it to a 0.003. Boom. Wow. Look how much prettier that looks. Long, huge, big short. Let's be honest. If you got into the short here, let's just do a ray, and you got out at the bottom, this is perfect world. That's 241.6 pips, people. 241 pips in a single trade without retracement. Wow. So for me, Tenjo, to answer your question, this setting, a 3 pip range bar, seems to be a nice, smooth looking executable. It looks like a nice, smooth executable chart. So the next thing that I want to do now is I want to confirm this. You guys, if any of you are seasoned traders, I don't know how many of you new to the environment and how many of you are old school traders, but we've been talking about multiple time frame charts, multiple time frame charts forever. Why do we use multiple time frames? Why are they important? Why do we need to do this? Well, it gives us a longer term perspective on the overall nature of a trend. GMMA shows trend. Trend is your friend. We've got all the little proverbs I can throw at you, but ultimately I want to be in the correct side of the trade for as long as possible. So looking at it, I want something else to give me some confidence that what I'm looking at here is true, that there's a consistency of message. And we do that by introducing another window. Okay? Very straightforward. Again, very clever, very easy to do. What I want you to do is, just while I'm here, by the way, we're looking at EuroCAD as an example. How did we choose EuroCAD? Just so that everybody is absolutely clear. On my range bar, my average daily range chart, EuroCAD features as the 1, 2, 3, 4, 5th most best performing over the last 5 days. It was 185. It's climbed to 205. We're seeing a nice improvement in 5-day range. This is a good looking chart. Right. Next question is, well, that's nice, Neil, but what's it going to cost me? If my spreads are stupidly wide, well, that's a bit silly. So the next thing we do is just bring up your TradeStation platform, which is what you get with Oanda on your FX trade. Let's look at EuroCAD. You can see a little bit wide at the minute, 3.8 pips. A little bit wide at the moment. Are we looking at any news? We're going to come look at the minute. Well, 3.5, 3.7. Yeah, that's about right. It hovers around the 2.8, 3, 3.2, 3.4. Right, it goes down to 3.3. We got 3.5, 3.6, 3.4. So not bad. For me, three pips as a spread is perfectly fine. If my target is 30 or 40 pips. So that for me is a pretty good spread. What you don't want to be doing is looking at this, we're down to 3 again. It's improved. Again, there's a little bit of volatility. Liquidity is always an issue. You can see the other pairs. We've got 1.9s, 1.7. These are good. This is, by the way, just the bog standard. I'm looking at exactly the same account as you guys will be looking at. Sadly, I don't get any special favors from Oanda in terms of spreads. I'm in exactly the same environment as you. Our competition is the same. It's fair, even playing field. So yeah, EuroCAD down to 3.2, 3.1. It's already settling down to 3. Okay, so improving. Around 3 pips, 2.9, looking good now again, is a really good, it's a good spread. That would be something that I'd be happy with. Victoria, yes, it is being recorded and we'll make it available to you. No problem at all. All right, so now what we've done is I've got a currency pair, Euro CAD. I've smoothed it out down to a 3-pip range bar. It looks sexy. It looks clean. Lo and behold, I'm seeing a shortening. Can you guys see the fast group? The blue group is beginning to descend. I'm going to be looking out for a short opportunity. So what I want to do is to confirm it using the equivalent of a multiple time frame chart. So the equivalent of the multiple, the 15-minute, 10-minute, 5-minute, 2-minute, whatever it's going to be. What we do is very easy. Open up another window. So open up a new window in your browser. By the way, folks, I like to use Chrome. I find it's very stable. I would advise anybody who is using a browser, if you don't mind, start with Chrome. We have, funny enough, the difficulty is each one of these organizations writes HTML5 around a central sort of scripting system. But at the end of the day, there are always going to be subtleties in execution. We've tended to find, in the years that we've been testing the software on this platform, Chrome tends to be the most stable. You get good performance out of all of them, let's be clear. I personally find Chrome to be probably the best in terms of stability and execution. So start with Chrome. Right, head off, open up a new browser window, head off to our homepage, again, the ANTSSYS trading platform. Now you just want to open up, because this is our live account. This is my live trading account. Here's my trade button here. You can see there's my trade ready to load. I could go long and short. I'm ready to place a market order. I don't want to be doing that on every screen because I'm going to confuse myself. So just go to your practice account, click on the link to the practice account, and it'll take you through. It'll replicate what you're looking at on your other screens. Just give it a second to load. Bearing in mind, I am chewing up a fair bit of bandwidth on this. I'm looking at as if this is a 2-pip range bar at the moment. I want to step something back. I'm just going to maximize this. We'll come back to the other screen. So now I'm looking at a second screen. I just want to maximize the information that we're seeing. I'm going to turn on my MA crossover so my things looking colorful. Look at this, guys. Looking into the shorts. What did I say earlier about a shorts? People are going to accuse me of witchcraft. And I want to make this a nice. We got a 3-pip range bar on the chart that we're looking at the moment. I want to step back a little bit. I want to get the information. I want to condense the information. I want to give myself a little bit more information than is currently available with the granularity of the 3-pip range bar on the other page that we're looking at. So let's just step this right back. Let's make this a 10-pip range bar. Let's make it something exciting. Make it an 8-pip range bar, something in between. Right. That's very interesting. Look at that information it's giving us. What is it telling us? That currently, with the longer term trend on EuroCAD with an 8-pip, which is 2.5 times, 3 times further back, in more density than we're looking at with the our trading chart. It's telling us that we're we're looking for shorts. Look at the condition at the moment. Our fast group is well below the 300 EMA. Let me just turn off the EMA channel. This is just going to be confusing information. We don't need it. And you can see we're looking at shorts. And lo and behold, exciting enough, we're starting to get a short condition forming. Look at this. So in this environment, what it's telling me is that looking further back, the overall trend is your friend. The overall longer term trend, and there's an ant has just fired short. So in other words, on a longer term time frame, it's telling us that we're going to be looking at the EuroCAD is actually looking at a short state. We're looking at short trade opportunities. And lo and behold, look what's happening. The fast group is descending below the slow group. So what we now be looking out for, I can't, unfortunately, I'd love to sit with you. I would happily sit with you for as many hours as it takes, what we do every day. I've burnt up 42 minutes of your time already. But thanks, Grant, for picking that one up. But this is what you do. You'll be sitting and waiting in front of your charts, perhaps have 2 or 3 currency pairs that you're comfortable to trade, that the spreads are competitive. Make sure you pick ones with good spread. Look at EuroCAD's down to 3 again. It's looking good. And then be looking for ones where, as I said, it's a nice smooth picture. Let's see, Victoria's asked a question. The red and green dots are recommended entries, or do they signal happy hour time? Right, well, it's a happy hour if you like. Victoria, good question. Again, this is, you see, my mistake. Please, do you see why it's important to be asking questions? The ants themselves, these little signals here, are our proprietary information. It's what I'm not one of them, one of our clever technical people has determined by looking back and doing all of the maths for us. It's taken all of the guesswork out, and it's a call to action to take a long trade position. So the green arrow is to take a buy position, and the red arrow is to take a sell position. What you don't want to do is take, red after, in this instance, excuse me, it would be a very good, you wouldn't have cost you any money. You would have made a fortune by taking the shorts all the way down. Here, you could arguably take the longs all the way up. What we do is we introduce. Let me just pull this across. Okay, so again, guys, we're looking for the short. We're looking for the short. You'll notice what you'll notice here is that this is going to color change. It's going to go to amber. It'll change to yellow in a second, I hope, as it continues on the downwards on the downward side. What we do is we have a thing called an MA channel zone, which is at the moment I've set mine. Again, this is you can set up under your ANTSSYS, under your configure. There's a configure tab. You configure under your MA channel zone. At the moment, I've asked for a 0.001 from either side of the 300 EMA. So the total size from top to bottom, from the top of that to that middle line there is 10 pips, 0.001, and from the middle line down is another 10. So this is 20 pips wide. I believe that that's probably, look at this, guys. Look what's happening right now as I'm talking to you live. Wonderful. I get goosebumps. I actually get goosebumps. This is very exciting for me. You'll see that I've asked it to identify a zone, which is this gray area, 20 pips wide. What it does is I want to try to be disciplined to take a position as close to this within this gray zone, this gray line and gray line. You can see it's slightly grayed out. I hope it comes through clearly on the screens that you're seeing. I want to be inside that zone because it gives me a high probability of being at the point of retracement or continuation. And if it does fail, if I take a position, let's say I take a price down here and it fails for a short, it's going to take me an awfully long time to get a change in color and burn me before I get the chance to realize that the trade is a dud. I'm probably going to hit my stops. So we want to be trading as close to this 300 EMA. And what we've done is, as an organization, we've made the information as easy to read as possible. I've made this now 15 pips wide. You can see you want to be taking a position with prices in and around this area here. Very important. That's why we do it. That then essentially is the system that we incorporate. At the moment, I'm using 2 time frames. I can step it back. You can go 10, 20, 30, 40 pips. Bear in mind, tick-based data, range-based data, which is what's generating these range bars, takes a lot more data than you and I are used to seeing traditionally in a candle-based chart. Bear that in mind, guys. If you have we all work here. I've got a fiber pipe that comes in at about 85 megabits per second. Now, again, not everybody needs it, but it is something that the more you can never have too much of something. Nice high-speed connection. I typically have never had a problem before they upgraded our exchange BT here in the UK. I was trading at about 3.8 megabits per second pipe, and that was perfectly adequate to be running multiple screens. Nuno's asked a question in terms of alarm functions. We have built an alarm into the ANTSSYS at the moment. The difficulty is depending on the speed of the chart that you're looking at, something like this. I mean, we've been talking now for 45 minutes, and already we've seen 1 or 2 opportunities come up. You get this scenario where you're going to getting too many signals. Certainly, the ability to have a signal which sends you a text or sends you an email or pings make a noise in the chart is something that we're going to be building into later renditions. At the moment, we believe that the information that we're providing you with is sufficient to draw your attention to something. This is a high-speed environment, folks. This is, we don't take a position and then disappear for 4 days. This is quickly in and out, and we've got the tools to do that. If you want to step it back further, if you wanted to make these, let me just turn off the trade functionality quickly. If you guys wanted to look back further on the range bars, and say, for example, you wanted a 10 pip range bar. Looking back, okay, again, you see now here we start to run into a challenge. It's actually a good point that we make. Each currency pair is determined by the feeds that are coming off the ANTSSYS servers all over the world. And quite often, tick-based data, we're limited in terms of our look back, simply because the quantity of data that we're looking back it's too much information. So in other words, we're obligated to make our view more granular. We need to zoom in closer than that, guys. This is too long looking back. So 10 pips as a trade execution chart on a currency pair like EuroCAD is too slow. Just the bottom line is it's just simply too slow. We need to be looking at in more detail. I've just discovered with you, and we've done it together, that looking at a 3 pip range bar EuroCAD looks about the business. Ryan asked the question, for my active pairs like pound New Zealand, is there a need to have more flexible well, let me just see your question. I've just run out of space for your question. Let me just widen my boundary 1 second. Hold on 1 sec. All right, your question is the need to have a more flexible entry channel so you won't get stopped out so quickly instead of 10 pips outside of 3? How about a 15, 20? Good question. Ryan, Mike, the question to you is I mean, in terms of your personal trading experience, I mean, in terms of your personal targets, I've just widened this to a 15 pip channel here now. For me, anything less than a 2-to-1 reward to risk, it doesn't make my trading time attractive. In other words, for every dollar I'm exposing, I want to make at least $2 back. Ideally, I want to make 3-to-1, even 4-to-1. In some circumstances, we can see as good as 8-to-1 returns. So what I don't want to be doing is widening this where it's so prohibitive. In other words, it's putting me so far beyond the 300 EMA that I'm not seeing a good reward to risk. In other words, if this is 15 pips short and 15 pips long before I even mature my trade, and I'm trading beyond that, in other words, I've got 15 pips to go back before I get a color change in the moving average. In other words, in lay person's terms, there's too much burn before I confirm whether the trade was accurate or not. Now we got a high probability system. It's going to put you on the right side of the trade more often than it's not. That's why the system is receiving the reception that it is. It's a good working system. The difficulty being you don't want to be so far on the other side of the trade, in other words, the wrong side of the EMA, where your channel is so wide that you're on a 30 pip take profit with a 30 pip channel. You're going to be burning up your trade. You know, you've got to be at 2-to-1. I've only got to be right 33% of the time. I'm only going to be right a third of the time. At 2-to-1, I've got to be right 50% of the time. So optimally, we want, oh, look at this, change red. Look at that, folks. Brought to you by, no, I'm kidding. I'm really exciting to see it doing what it says on the tin. But ideally, you want to have and there's the end. Ideally, you want to have a situation where your reward to risk ratio is manageable. So don't make your moving average channel 50 pips wide with a 20 pip target. That's going to cost you money. Pound New Zealand, let's have a look at Pound New Zealand as a pair. Let's just make it relevant. Let's talk in the real world. Let's not talk hypothetical. Pound New Zealand is 293. The next thing I want to do, of course, is look at spreads. What does it cost me to do the business? Let's bring up the window. I don't have it here. Let's add it. Oh, some of you are quicker than me. Will be able to tell me what it is. Oop, not gold New Zealand. That's never going to work. It's going to be pound New Zealand. Let's turn that off. So pound New Zealand, and let's save it. All right, pound New Zealand at the moment. Woo! There's a bit of pain there. I mean, 10 pip spread at the moment on pound New Zealand. Ooh, that's for me personally. I've got a target of 30 to 40 pips a day on a currency pair. To burn up 10% of that, 30% of that, 10 pips on 30 is 30%, 33% on the cost of getting into the trade, to me is prohibitive. So I personally, this is not trading advice. This is purely my sentiment in terms of me, what I do myself. I'd far rather be throwing my money at something like Euro Pound, which has got a 1.5 pip spread, than Euro Pound New Zealand, which has currently got a 9.6 pip spread. Now, I'm happy to sing the praises of Oanda. They're a really great crowd. They're really progressive. We've got some really exciting promotions that we continue to do with them in terms of keeping you guys engaged and keeping it meaningful. But at the same time, they're a business, and you guys need to lean on them to give you good products. If you feel that they are need to come to the table with more competitive spreads on a particular currency pair, when I say that every single one of your emails are read and interrogated by them, that's absolutely true. Every single thing that comes through the system is evaluated and looked at. Every single email. If you write to Oanda and say, "Hey guys, how can we do about? Can you put me into a category that gives me X, Y, Z?" You're going to get someone paying you attention. So, if you were determined to trade pound New Zealand, and you said to them, "Listen, guys, I'm going to put X amount of money into an account so I can put my money into the pound New Zealand currency pairs," I'd encourage you to go to Oanda and say, "Come on, guys, sharpen your pencils. Let's give us better rates on the spreads," and they'll listen. Do that, guys. Do that. This is a relationship, and please feel free to use it. the platform I'm using, Victoria, I'm not sure I understand the question. Hedgepig, because that's my nickname from high school, Hedgepig. No, sorry. That's a great question. My nickname, it's a long story. It goes back to Macbeth. I'm not going to embarrass myself with it now. My nickname at high school was Hedgepig, and so I use it as my nickname to trade with. So yeah, that's the actual trade panel. The trade system is FX Trade. You can trade on our system. In other words, you can trade execute on our platform. I can show you. Bring up a trade panel. We're in a short state here at the moment. Bring up a market order. Tell it I want to buy 10 units at a price of 14.45. Too late. Really, the ant is happening. I'm already in a position. I'm a bit behind the curve because we're talking. I want a 15 pip stop, and I want a 30 pip take profit, and it's a sell order, and I put it in, and I click sell, and I submit it, and the order is in. There's my position. There's my stop. There's my take profit, and I'm in. So you guys can trade. This is a trade functionality. I'm probably going to get Grant, my colleague, bleat at me for saying so, but we've added a great deal of new functionality to your trade management that's in beta. It came out of our laboratory on Tuesday night. I spent the day working with it yesterday. I'm happy with it, and it's going to give us the ability to manage your trades from the screen even more efficiently. The ability to click on this, move your stops, replace the order, submit it, change your position size, scale in, scale out. These are all coming, and they'll be with you imminently. And when I say that, it could be as soon as the next 24 hours. Again, I can hear Grant is probably going to bleat, but apologies, Grant, but it's coming, guys. It's here. It's now. It's not. It isn't going to be a month away. I've looked at it myself in the last 24 hours. Very exciting. So the ability to trade on chart, load your chart, see your trade, see your position, see how much profit you're in. We're already profitable in this. It's not a great deal, but I'm already 0.2% profitable in this trade in the short time I've been sitting with you guys talking to you. It is awesome, Victoria. Very, very exciting. Let me just scale back out of that one. I'm just going to cancel that trade. It's real money. Right, guys, that probably concludes everything that I wanted to say today. It's 54 minutes. We've been doing it for. So I'm just getting a notice here from right. Yeah, guys. In simplest terms, look at that trade. Look at it, guys. How many of you are short in EuroCAD? I didn't tell you to, but how many of you are short on EuroCAD? John, great question. Stop loss. Wow, great question. Let's do it together. We know that statistically, a currency pair, why are these important, guys? Why is this information important? I could really do this for hours and hours. I fear I would lose all of you, but I could really do this for hours and hours. EuroCAD has got a 205 pip range. We know that a currency pair will meet or exceed 75%. So it'll move 3/4 of its total daily range 82% of the time. 85% of the time. It's 80-something% of the time. Over 80% of the time. What that means is, if I'm on the right side of the trade, there's an incredibly high probability, very good probability, that the trade is going to reach 75% of its average daily range and beyond. It's probably going to reach 100%, but we want to be dealing with high probability stakes. We want to be dealing with high probability opportunities. So what we do is, look at this trade. What we do is, we turn on our average daily range levels. And what you'll see is, okay, this is great. This is going to confuse the life out of everyone. This is fantastic. What you'll see is, from the midnight open, which was over here, price climbed through the 75% long. It climbed to 100% long. So it went over its 100% range long. Now, already that's done. We know it's about 200 pips. It's done over 100 pips long. So what it does is it automatically draws up the lower level, the bottom, the 75% short, 100% short. They follow it up. Because obviously, as this, I'm signaling with my hands, which is stupid. Of course, you can't see me moving my hands. As this price climbs, it brings the lower level up with us. So in other words, it doesn't have to come back down so far to have hit its daily range. And you can see it went through, it entered We got a long opportunity, smashed through the 75% level, smashed through the 100% level. It's turned over. Our short happened right at the 50% level, and it smashed through the 75% level. So it's actually doing everything that the textbooks tell us, and it's doing it live. Again, this is not. I haven't. I don't have a connection to the forex markets. This is just me sitting at my exactly the same shaped desk as you guys are looking at. And what you'll see is, from the time that it gave us the opportunity to get in to the time it got down, it's done 30.9 pips. What did I say was my daily target on a currency pair like this? What did I say I'd be happy with? 30 pips a day. It's generated that right now in the time that we've been sitting here by going through the 50% mark to 75% short. And it's hit 75 and it's starting to climb again. Now would be a good time to get out. That would be a good time to get out as a stop. That would be, this right now would have been a good 30 pip trade that would have been painless, and we've done it together live. Right, what a stop loss I have. Story. Right. Can you explain how to interpret the arrow red and green again? Right. How do? Good. Tendra, let me explain it again. I'll take a moment to explain. The actual trade, because we have to be very. How do we say this? We have to be I want to give you guys as much information as possible. We want to give you as much insight to use to intelligently break down what you're seeing as data coming off the markets. The decision to trade is always going to be yours. When you execute, when you physically trade, there are two ways you can enter the trade. You can be looking at your GMMAs, fast group over slow group, look at the color of your MA channels. In other words, is it green, is it red? Are we long, are we short? When you're seeing green, when you're seeing red, when you see the green arrows or the red arrows, that's a call to action. It's not an instruction. It's not a command. It's a call. It's giving you guys, it's saying, hey, pay attention. The market is in optimal state to be reaching the conditions that we keep on preaching about. Guys, come to the party. We're ready to go. You can either trade from here, in other words, when that happens, physically click the sell button at the orders, the levels that you're comfortable with based on your own good sound money management. Manage your accounts. This is a high risk environment. Be very careful about managing your risk. Trade from here, or you can do it in your FX trade panel in exactly the same way. Bring up the currency pair, EuroCAD. Where is it? Bring up EuroCAD. There it is, and then you can trade on the chart as well. So they're using the FX trade panel. So you can do it. They're the same system. They're guys. We're talking. This is an Oanda trading execution platform. It's the same thing. I've got it. So either or. We can do the same either here from in our ATP or on the FX trade platform. Guys, I mean, again, look at this. I mean, look at this together, guys. We've been sitting here looking at it. We've been talking for 59 minutes. I've got an amber warning that I'm going to be losing you guys because you're going to grow bored. But the reality is, look what's happened at the time we've been talking. The chart has turned over. We know that the longer term trend, because we've got it, guys. We've got it. The longer term trend is down. Look. We know the price has come up, touched the 300 EMA, and it's short. We know that price is coming down. Everything is telling us that we're looking for shorts. The price has climbed. Let me just turn off this array. Keep getting in the way. Price has climbed. It's gone through the 100%. It's dropped through, crossed through the 50% and down. And boom, look at this trade, guys. Look at the trade that we'd be in. Question, Peter. Nice to have you along, Peter. The question is, how do I change the range bars back to the green and red on your screen? Just make sure that, just work with me. Let's just do the basics together. Make sure that you've got the MA crossover is selected. If you don't choose the MA crossover, it won't color the bars. So first of all, make sure that the MA crossover is selected, and then make sure you've selected range bars. You can turn off range bars and it'll go you a time-based chart. This is now a 1 minute chart. But we want that granularity. We want that single fractal state, that repetition state to be expressed. So we turn on range bars and that smooths it out. Look at it. I mean, guys, look at this trade. Look at this trade. Absolutely. Thanks, Peter. You got it. Magic. But look at this, guys. I mean, this is just extraordinary. We went together. We looked at our ADRs. We found a pair that we liked. It was looking good. It was a longer term for the short. It's moved 52.9 pips in the time that you and I have been talking. In the time that we've been spending hanging out here this morning, it's generated pretty much 60 pips of trade. Absolutely extraordinary. I literally get goosebumps. I can't describe to you how exciting it is, because this is what we do every day, and boy, this is what it does. This is why it's so exciting. Can't understand why everybody's not playing along. Right, to summarize, guys, have your questions ready, pop them in there. What you want to be doing is you want to be finding yourself a nice high ranging currency pair. How do I find a currency pair that's ranging nice and highly? Come to our website, look at the average daily ranges, make sure that it's nice and high. Choose a currency pair that the spreads are not going to chew you up. I want to make sure that the spreads are competitive. Pound New Zealand is a bit of a pain. It's a bit of a cow, 10.3. EuroCAD is only 2.9, 2.83. That's competitive. That, for me, that's a winner. I then want to bring up my charts. I want to make sure I've got a live chart, and I've got a trade chart. So in other words, this is my live chart, and then you can open up as many demo charts in the background as you want. And on those, look at the confirmation, and we're in. Absolutely extraordinary, guys. That's probably right. Let's have a look. Let's check more questions. With the red ants appearing now, there's still... Okay, John, the short answer is no. It's a good question, but the short answer is no. The reason is this. I've just closed my live chart. Let me just bring it up for you again. The reason is this. We've missed the opportunity. Guys, don't... This is fundamentals of trading. This is the psychology of the trading. Don't chase a trade. The chart will give you... You will be given many opportunities during a day to trade on a chart. These ants, look at them, they all fired absolutely perfectly within the moving average channel, this gray zone. This is the optimal area to be entering in. It gave us one or two kind of on the margins, we're on the excesses, but imagine, John, what had happened. John, what happens if we'd gone short here and the trade had failed? In other words, that price had risen. I've got to wait a hang of a long time before it goes from this state here, crossing through, and then I'm out. That's going to cost me a lot of money. In this instance, we found a perfect trade, and it's happened live on the markets in front of us. But what I want to do is I want to get in at the start of the trade. Getting in here now, the answer is still telling us that we're in a high probability state. So we're still in a place where things are looking promising. But at the end of the day, it's a diminishing return. Let's turn on the ADRs together. Let's look at the daily ranges. Look what's happened, guys. In the time that we've been talking, it crossed through the 50% short. It's crossed through the 75. That's where the meat is. That's the money shot right there. That's where it's all happening. And it's pretty much reached 100% low. The statistical probability of a chart continuing beyond what it does historically for the last 5 days of 100%, that's 100%. This pony is tired. This is it needs to be watered. It needs to be put to pasture for the day. This chart has done everything we could have asked it to in the last 45 minutes. It's done it. Done what it said on the tin. The statistical chances that you're going to enter short term and it's going to continue, guys, is a diminishing return. It becomes lower and lower and lower probability. So we just leave it alone. Nuno's question, where can you find the intro? You can come to the website. It's on our YouTube channel. All the links are on our website. The interest, I did one yesterday. It wasn't, sorry, on Tuesday. Probably, wasn't the best one we've done. There's another one on there that was done about a fortnight ago. You're welcome to come and have a look at it, download it, watch it. To summarize, if you have any questions, I'll just bring up that slide again. Send them to, if you have a question that is a sort of a support ticket question, send us an email to support@ANTSSYS. And if it's just a general question about the system, just send one to the ANTSSYS team at antsys.com. That's where you want to reach us, guys. Just go to our website, antsys.com. Everything is available on the website. It's nice and clever. I mean, people like myself can navigate it. There's hope for everybody else. It's where you want to start. Right, I just killed the screen when I did that. Let's go back here again. Right, guys, I think we've done well. An hour and 5 minutes. I've just shown you a live environment where we've shown high probability trade, high probability conditions, the ants and the system doing everything that it says on the tin. I could probably not have asked for a better example of how it works. And you know what? I could confidently sit here and do this again with you tomorrow, and I would do it with just as much confidence. I think we've covered off all the things that we needed to. I'll probably do another session which is even more advanced, where we talk about trade management, risk management, money management. The reality is, in terms of particularly high leveraged accounts, I know that we're privileged to be able to get, certainly outside of the US, which is they're capped on their spreads, on their leverage. guys, we can leverage really well. You can turn a small amount into a lot into a relatively short time, but you can also jowl up a lot of money in a relatively short time, and that's what we want to do. A big part of this is the psychology of managing your money as well. We'll probably do a session on that too. We've been here long enough to know that you have your days where it doesn't go to plan. Today has just been, as it normally is, a day where it's gone to plan. Terence, hearing you say it was a great presentation is great for me. Thank you. I enjoy it. I love what I do. I speak with a great deal of confidence because I believe. And that doesn't come from anything other than using a system myself that I know works. And I look forward to having plenty more interaction with you guys. Again, thank you for joining me here this morning and this evening. This recording will be published on the website shortly. When you close here today, guys, each of you will be sent a very short survey. I know there's nothing more annoying than a survey, but please take the time to fill it out. It asks a couple of clever questions about how you experienced today and what you want to do. That information we do read, we look at it and we assess it, and I shape my next presentation to make sure that we're giving you guys the information you want. It doesn't help us that I sit here as a successful trader and never give you the tools. I've got to work out a way to give you the guys the information that you need so that you can catch up and join us on this journey, and that's important to me. So you need to be telling us what you want, and we want to hear it. Right, John, it's been a good hour. Hey, it's been good fun. I enjoyed it. Tenjo, you're very welcome, guys. Thank you for your questions. Thank you for your feedback. Thank you for your input. And I look forward to speaking with all again soon. Thanks again for your time.